Bryce Holdaway and Ben Kingsley from Empower Wealth, welcome and Happy New Year.
Happy New Year, and to you too.
So it's that time of year where we're all turning to our crystal balls and trying to make predictions for the next 12 months. So where do you see the market heading, and where do you think the star performers are likely to be in 2014?
We love general commentary about property markets, don't we?
We do. It's always interesting because you're buying one or two properties, but you've got to make a comment on the whole state. But we'll do that.
Look, I guess for us, we think that general commentary isn't that helpful for people, because if you think only 12 months ago, there was a lot of comment about the Melbourne marketplace, that it wasn't the place to be and it was going to be flat for a little while, and then fast forward 12 months and Melbourne did really well. So it's probably more about certain types of property in certain areas. But as a general rule, we're of the view that if you want a sort of an overview or a blanket statement, we think that the Brisbane market is the one to watch for 2014.
Yeah, look, it's been undervalued. So from an affordability point of view, and it's been hit with big floods, and so sentiment was always a little bit sceptical about that market. So now we've got a situation where all of that's washed away, and the media commentary is quite good. So there's definitely a general uplift in the Brisbane market. We still think there's certainly some room to grow in the Sydney market, because that's also been flat for so long. So, the economic activity in that market, the share market's doing well. It's the financial capital of Australia. So we're definitely seeing uplift again in the Sydney market. So that's a positive market. Melbourne?
Yeah, because our view is, and we've talked about this a fair bit, haven't we, that Melbourne and Sydney are in the top 100 cities in the world. There's only 12 cities in America that have a bigger population than Melbourne or Sydney. So they are significant metropolises. So within certain parts of those major cities, they're always going to do well. It's the areas that have a little bit of job insecurity, which I think are the areas to avoid, because if the jobs are a bit at risk or a bit insecure, that means it has that flow-on effect to the property market.
It does, and so markets like Perth and Adelaide, which are manufacturing and mining centres, they have some. I think Perth has some uplift, but there's also a bit more elevated risk, because it's an industry that's slowing down, and we've seen some commentary coming out of China that their GDP is going to drop down to maybe 3 or 4%. So that's going to have a sentiment impact in that particular market. So as much as I think Perth, as a general rule, will probably still get a positive outcome, we're still probably going to see a little bit of uncertainty. And Adelaide, Holden, and just that general sentiment, we still think there'll be uplift because interest rates are so low. But, I don't think it's going to go as well as some of the bigger states like the Brisbanes, and I still think Sydney's got a bit to go in it as well, and a bit of Melbourne activity also.
So will interest rates go up, do you think?
No, look, I'm of the view no. I still think one of the things that the RBA is really interested in, and I suppose this is my caveat, if values go harder, in terms of property values go harder than the RBA would like, then we will see a slowing. They will stop that momentum, because the problem with housing, it has such a big flow-on effect throughout our economy. So it affects retail, it affects jobs, it affects construction work. So as the capital injection that's not going on in the mining areas is then going to bring those tradies back into the metropolitan areas, that job and construction growth is going to be really important for the economic outputs of the Melbourne, Sydneys and those centres. So in short, if values go too hard, they will increase, but I actually see them remaining flat throughout 2014.
And what's also important too is the interest rates is the cost of money, but the banks have a view on their assessment rates. So when they're actually analysing someone's ability to borrow, they actually create a buffer over and above the interest rate. And I think that the banks have been really smart in Australia to make sure there's no repeat of what happened in the US. So I think that it's not necessarily all about interest rates, it's also about the bank's policies on their assessment rates on how much they will lend to people as well. So I think they're very conscious of not letting GFC Mark II happen here recklessly. So I think the interest rate environment is, part of it's the cost of money and part of it's the assessment rate that the bank has.
Is a fixed rate mortgage the way to go?
It's a great question. Fixing your rate is obviously something that's about your own personal circumstances. So if you've got tight cash flows, fixing the rate is a really smart way to go. But if you're actually trying to pick the market, we saw in late 2013 our fixed rates were at extremely low levels. Now we're seeing them move up just a little bit higher. So I'm on record as saying, look, I'd like to see clients consider hedging, so maybe up to 50%. fixing for maybe a 2 or 3 year period. And if there's still some downturn in interest rates, you'll obviously get the benefit of that. So it is about, I suppose, hedging that position, and I'm a believer in that. So if I'm looking at a portfolio, or if I'm looking at my current home loan, I'd be saying a bit of fixing wouldn't be a bad thing to consider.
So why should people come to the Home Buyer and Property Investor Show?
Look, the Home Buyer and Property Investment Expo is a great place to get some really great fundamental knowledge. You're going to see a lot of really great speakers who are going to get up there and they're going to share their views. And like any investment, there's going to be mixed views. So it's good to sit down and listen to the arguments and the conversation that's being presented to you to make informed decisions. Now, make no mistake, there's also people there who are going to sell you their ideas, and that's a good thing too, because you're then going to build that knowledge up. So don't rush into anything, but these shows are a fantastic place to get a group of people and professionals that you can sit down and talk to and spend the day there so you can understand and start to think about what type of strategy that you may be able to undertake as a property investor.
Yeah, the Home Buyer Show can quickly concentrate your research, because you're actually going to, I think one of the better parts of it is there's a full range of topics being spoken about across usually 3 or 4 stages. And so if you love positive cash flow property, there'll be someone talking for you. If you love capital growth property, if you love to build portfolios, really whatever topic that you can think of it when it comes to property investment is on display at these shows. So you really get a combination of listening to people who've been doing it for a while, and then also people who are on the ground who might be able to give you the information that can assist you where you're at right now. So I've been doing the Home Buyer shows for a number of years now.
Yeah.
I still love it.
And I've been doing it the same. And I think also it's such a high value transaction that people want to ensure that they don't make mistakes. I mean, put some effort into your research. Don't just go and listen to the first person who calls you up randomly and comes out to your house and says this is the perfect way in which to invest in property. Make an informed decision, because there's a lot at stake. There's a huge amount of money at stake here, and if you get it wrong, like the ATO stats show, once they get one and they don't go again, usually it's because they've picked a lemon. So come along to the show. It's fantastic.